Alright, welcome to this video. I suggest that you carefully watch it and try your best to understand it. Basically what I will show here is the dynamics of stops in the foreign exchange market. I will explain various phenomena such as stop hunts, and the idea is to give you an overview at this stage. So experienced traders, they kind of know that this is going on a lot, that the price moves in a very irregular, chaotic fashion, and that this is related to certain orders that are placed on the market. And people who have done a lot of tape reading, who have done a lot of screen time, they know exactly what is shown here. First of all, let us distinguish, okay? There are at least three different types of stops. There are short-term stops, I call them STS. There are long-term stops, I call them LTS, and there are medium-term stops, MTS. And there are also other phenomena such as H4 stops. The distinction is vital. Yes, the smart money cartel will give these stops different priorities in different situations. For example, it's not difficult for the smart money cartel to take out a lot of short-term stops just by maintaining a range, by moving the price as much as possible into all directions. And for example, they will only go for LT stop runs if it's worth it and if the stop target is reachable. They will not just do big moves to get close to those kind of accumulations. And in particular, I draw your attention to the medium-term stops. These accumulations show very well what the general targets are, what the smart money will do next, etc. Let's start from scratch. So, of course, when you see the stops that are shown, the bigger the lines are, the bigger the accumulation. The more lines there are at certain price levels, the bigger the accumulation. And of course, there are a lot of different stops around the price at any given time. And remember that traders who try to avoid everything I'm showing here just by using stops, they are at risk to have big losses just as a result of a single trade that doesn't work and that continues for whatever reason. Just remember that. Okay, so let's start with a very simple example. We know the drill. There is stop accumulation. It is a target for the smart money cartel. They want to take it out. So they push the price up there, for example, and go for the stops. And as I have shown in other videos, there are other very, very relevant aspects you should be aware of. Okay? Please also understand that if you only understand, for example, 10-20% of the game, you will not draw the right conclusions. Okay, you need to understand all the mechanics. You need to understand how they interact and what the thinking of the smart money cartel is, because they will not just simply take out stops. It would be too obvious. People would detect it, and they would get into trouble. But yes, in general, those exaggerated moves, often connected to news, etc., of course, they are a result of stop runs of the smart money taking out dumb money, stop accumulations, and pocketing profits. You often hear when you look at different books and trading educators, okay, place your stop below the last low, above the last high. As a general rule, that's a misconception. That's one of the worst places where you can place a stop, because these areas tend to be a target for the smart money cartel. The reason why the price moves in such an irregular fashion, so chaotic, is that it wants to take out as many stops as possible. In particular, in the short term, it wants to kill the scalpers who try to make easy money. Remember, no easy money principle. So they go from one side sharply to the other. They take out those areas. It is no coincidence. Ranges are not linear, and the reason for that is, of course, stop hunting. And of course, there is no easy way to get that information. Yeah, you should also be aware that if you have something like a Squawk box, those quotations are often completely incorrect. Yeah, or they are after the fact if they quote those stop accumulations, what they do now and then. And if you just take order books, you will not understand how that works. Okay. Of course, there are other phenomena. There are even level phenomena. For example, the tendency of dumb money traders to place their stops and limits at even levels, etc. And the smart money cartel has certain tricks. For example, they just turn away before those levels are reached. Remember the pre-stop run counter move video I made some days ago. And these are simple examples, okay, here on the 10th of April 2015. I know, some time ago. So stop accumulation, this is a target. So the smart money algos, they want to go there. Of course, they do their pullbacks to take out people who are placed correctly. However, eventually they will go for it and take out the accumulation of stops, as it can be seen here. Okay. So if there's an accumulation of those stops, they tend to be a magnet for the market. But it is not that simple. And of course, on higher time frames, if there are highs like here, there is an incentive for the smart money cartel to overshoot highs, undershoot lows, etc. And remember what I showed before, it is an interplay of different components. It's not stops only. So firstly, you need to understand the different types of stops. You need to understand how these are treated differently. Then you need to understand other factors which are very relevant, okay? Otherwise, it would be easy to detect that kind of manipulation and to pinpoint it. But yeah, I can show you a lot of examples where there is an accumulation as a target and the smart money will take them out. And I like this example, okay? 3rd of April 2015. That was a US bank holiday, okay? Euro dollar here. And look, there's a stop accumulation up here, and then, there's nothing happening, market going flat. And then all of a sudden it goes kaboom. Look, it does a big pin and takes it out. And then, you see all these wrong explanations. Oh, was a fat finger phenomena or whatever. No. These are stop runs. They are on purpose. The smart money algos do them. The algos are pre-programmed to do it. And if you understand the mechanics, you understand those kind of weird market moves, which cannot be explained with conventional theory, of course. And this is a very important point I'm making now, okay? People, they struggle to understand. So if the dumb money pulls away their stops, okay, like in this example here, the smart money will not run behind them and take them out. In fact, they most of the time do the opposite. If they pull away, they go the opposite direction. So they're trying to tease the dumb money to pull the stops closer again. It's almost like a dance, and you can often observe these kind of games, okay, where the dumb money pulls away, hoping that, okay, maybe they can survive this move, and the market will then turn the other way, etc. And then, indeed, the market moves away, and then they pull closer again, and eventually the stop run comes. This is very relevant, okay? These things are not intuitive, and, you only understand them after a lot of observation. Okay, and I would like to end this introduction with these kind of examples. Okay, so if, for example, you have a target cloud, then there's a counter cloud. Okay, and at this point here, where the smart money wanted to do the target run, suddenly dumb money pulls away the stops. So what do? They go the opposite direction and do a counter cloud run first. Eventually, the dumb money pulls it closer, and then the smart money goes for the kill. Okay, this is one very relevant example you need to understand, otherwise it does not make sense to you. And there's a whole range of other principles I will not elaborate on here. Okay, and one thing which is very relevant is whether the market is inner range or outer range. Okay, so stop runs which are inner range are of more value than stop runs which are out of the range, for example. Okay. I think that for now this serves as a good general overview. Bye.